Welcome back to XRP Pulse, your place for fast, clear, and exciting crypto updates. Today's morning crypto report is packed with major market signals, and we have a lot to break down. Bitcoin whales appear to have defended a key price zone. XRP is tightening inside a triangle pattern that could decide its next big move. Shiba Inu whale activity has gone quiet, and the broader crypto market is watching major macro events that could shake sentiment in the coming days. The headline story is this: Fresh 1.5 XRP roadmap analyzes key triangle pattern break. Shiba Inu whales disappear from on-chain activity, and Bitcoin now looks firmly upward as CryptoQuant reviews a major whale U-turn. So, if you are tracking XRP, Bitcoin, SHIB, or the overall crypto market, this update is one you do not want to miss. Because right now, the charts, the whales, and the macro calendar are all sending signals at the same time. Bitcoin is back in focus after a dramatic move from the largest market players. According to the data discussed in the report, whales defended the $60,000 to $61,500 zone and helped push Bitcoin back up toward the $65,704 area. That is important because this zone was not just another random support level. It became a battleground between fear-driven selling and strong-handed accumulation. While many retail traders were panicking near the local bottom, whale wallets appeared to step in aggressively. More than 11,400 BTC was reportedly moved away from exchanges and into cold storage, which created a supply shock. When coins leave exchanges, it often means those coins are no longer ready to be sold immediately. That reduces available supply, and when demand stays alive, price can move upward quickly. This is why analysts are now saying Bitcoin's path of least resistance may be pointing higher. Now let's talk about XRP, because this is where things get very interesting for the XRP community. XRP is currently compressing around the $1.13 area inside a symmetrical triangle pattern. For anyone new to technical analysis, a symmetrical triangle usually means the price is getting squeezed between lower highs and higher lows. In simple terms, buyers and sellers are fighting for control, but neither side has fully won yet. The longer this kind of structure tightens, the more powerful the breakout can become once price finally chooses a direction. Analyst Ali Martinez highlighted this setup, and the key idea is that XRP may be building energy before a larger impulse move. Traders are watching the $1.20 resistance area closely because a strong move above that level could open the door toward the bigger psychological target near $1.50. But as always, the market will not make it easy. The exciting part about XRP right now is that the technical setup is not happening alone. It is coming at the same time as major fundamental developments around Ripple. Ripple CEO Brad Garlinghouse recently spoke about ambitious goals, including the possibility of XRP targeting a new all-time high. On top of that, Ripple is also preparing around the idea of obtaining a full US banking license, which could strengthen its position in the regulated financial world. This matters because XRP has always been tied to payment utility, liquidity, and institutional adoption. If Ripple continues moving closer to traditional banking infrastructure while real-world asset tokenization grows on the XRP ledger, that could create a stronger long-term story for the asset. Still, short-term traders need to stay sharp. Even with bullish energy building, the 1.20 area could bring profit-taking, and price could still revisit support near 1.11 before any clean breakout continues. For XRP holders, the key message is patience, because triangle patterns can be frustrating before they become explosive. Price may look quiet, but quiet does not always mean weak. Sometimes quiet means compression. Sometimes it means large players are positioning before volatility returns. The report points out that whale buying volume around XRP has been high, and that is something worth watching closely. When large wallets accumulate during sideways action, it can suggest confidence behind the scenes. Retail traders often get bored during consolidation, but whales may see that same period as an opportunity. If XRP breaks above resistance with strong volume, the market could quickly shift from cautious to excited. But if the breakout fails, we could see another test of lower support. That is why the next move around $1.13 to $1.20 is so important. XRP is not just sitting still, it is building pressure. Now moving over to Shiba Inu, the tone is very different. The report says SHIB whales have basically disappeared from on-chain activity, and that is a major change from earlier in the month. At the beginning of June, large private holders were still playing a major role in SHIB flows. Whale activity reportedly peaked on June 3rd, when mega inflows into whale wallets crossed 1.8 trillion SHIB. But after that, the activity started to fade. On-chain flowcharts flattened, and large investor transaction volumes dropped from massive numbers to more modest levels. That tells us private whales may not be actively pushing the market right now. Instead, they appear to be waiting on the sidelines. For a meme coin like SHIB, whale activity matters because large holders can heavily influence momentum, liquidity, and market confidence. When they go quiet, the market can lose energy quickly. The interesting twist is that SHIB activity did not disappear completely. It simply changed hands. Instead of private whale wallets dominating the network, the largest flows are now coming from centralized exchanges and market makers. According to Arkham intelligence data mentioned in the article, Binance's cold wallet received a massive 24.45 trillion SHIB worth around $114.93 million over the week. That is an enormous amount of tokens moving through exchange infrastructure. Wintermute also showed major activity, with its Binance-linked deposit address receiving 350.9 billion SHIB, worth about $1.68 million, while another Wintermute hot wallet received nearly 240 billion SHIB, worth about $1.15 million. This suggests the current SHIB network activity is being supported more by technical exchange transfers and market maker operations than by fresh aggressive whale buying. That does not automatically mean SHIB is finished, but it does show that the excitement has cooled. For SHIB investors, the main question is whether this is simply a temporary summer slowdown or the beginning of a deeper loss of momentum. The report points to CoinMarketCap metrics showing SHIB's daily trading volume to market cap ratio at only 2.78% as of June 15th. That number suggests trading interest is not especially strong right now. In simple terms, the token still has a large market presence, but the actual daily activity is looking thin compared with its size. This is often what traders call a classic summer slump. Volumes drop, whales step back, and markets wait for a new trigger. For SHIB to regain stronger momentum, it may need either a broader meme coin rotation, a major ecosystem update, renewed whale activity, or a strong Bitcoin-led market rally that lifts risk assets across the board. Until then, SHIB may continue moving quietly. Back to Bitcoin, because this whale story is one of the strongest signals in today's report. Crypto quant analyst Wu Mingqiu described how large players appeared to buy into panic while retail traders were selling near the lows. This is a pattern crypto markets have seen many times before. When fear becomes extreme, inexperienced traders often sell because they think the market is breaking down. At the same time, long-term players sometimes use that fear to accumulate at better prices. The report says the 12-day downtrend in holdings among large Bitcoin holders has officially reversed upward. That is important because it suggests whales are no longer reducing exposure. Instead, they are building positions again. Another key metric, inflow CDD, which tracks the movement and selling of older Bitcoin, reportedly collapsed from 2.16 million to just 33,000. That means long-term holders are not rushing to sell. This is where the Bitcoin supply shock story becomes even more powerful. If long-term holders refuse to sell, and whales are withdrawing coins from exchanges, then the market can become very sensitive to new demand. The report says the exchange whale ratio jumped to 62.3%, showing large player activity on exchanges increased sharply. But instead of creating a big sell-off, The key result was that more than 11,400 BTC, valued around $700 million, moved from trading platforms into cold wallets. That is usually interpreted as an accumulation signal. When Bitcoin supply on exchanges gets drained, buyers have fewer coins available to purchase at current levels. If demand increases even slightly, price can move quickly. This is why Bitcoin bounced back toward the mid-$65,000 range. The market had been afraid, but the whales acted like they saw value. The $60,000 to $61,500 zone is now being described almost like a reinforced price floor. Of course, nothing in crypto is guaranteed, and no support level is unbreakable. But when whales defend a zone with serious buying and long-term holders stop selling, that area becomes psychologically important. Traders remember where the market bounced. Algorithms watch that level. Institutions watch liquidity. Retail traders watch it too. If Bitcoin stays above that zone and keeps pushing towards $66,000, confidence could return very quickly. But if Bitcoin loses that support again, fear could come back just as fast. Right now, though, the report suggests the weak hand selling phase may be complete. Coins appear to have moved from nervous holders into stronger hands, and that kind of transfer often happens near major turning points. The broader crypto market is also reacting to macro news, and that is where things get complicated. Bitcoin has been trying to storm back towards $66,000, while the market remains under extreme fear. The Fear and Greed Index is reportedly sitting around 20, which means traders are still nervous even as prices recover. That combination is actually very interesting. When price rises while fear remains high, it can mean the market is climbing a wall of worry. In other words, many traders do not fully trust the rally yet, so they stay cautious, hedge positions, or avoid jumping back in. But if price continues moving higher, those same traders may be forced to re-enter, which can fuel more upside. The report also mentions that Bitcoin's rebound triggered a major short squeeze, liquidating around $150 million in short positions across crypto assets. This week's major risk event is the FOMC decision and Fed press conference scheduled for Wednesday, June 17th. Crypto traders are watching this closely because interest rate expectations can heavily affect risk assets like Bitcoin, XRP, Ethereum, Solana, and meme coins. If the Federal Reserve sounds too hawkish, meaning it signals that rates may stay high for longer because inflation remains a concern, the recent crypto rally could face pressure. Higher rates usually make investors more cautious, especially with speculative assets. But if the Fed sounds more balanced or less aggressive than feared, risk appetite could improve. That is why traders are being careful right now. They know Bitcoin has bounced, but they also know one macro headline can change momentum quickly. Until the Fed speaks, the market may remain jumpy, reactive, and very sensitive to every word. There is also a geopolitical layer in the report, with markets watching a possible Middle East peace agreement signing expected on Friday, June 19th in Switzerland. According to the transcript, optimism has improved as news of a peace agreement increased global appetite for risk. But the report also makes it clear that full confidence may not return until the agreement is officially signed and key concerns around the Strait of Hormuz begin to ease. This matters because geopolitical uncertainty can push investors away from risk assets and towards safer positions. When tensions cool down, Bitcoin and crypto can benefit from improved market sentiment. But until the signatures are actually in place, traders may not want to fully commit. So this week is not just about charts. It is about central banks, global politics, liquidity, whale behavior, and investor psychology all moving together. For XRP specifically, this macro backdrop adds extra importance to the triangle pattern. A technical breakout can fail if the broader market suddenly turns risk off. But if Bitcoin continues upward, the Fed does not shock the market, and geopolitical sentiment improves, XRP could have the perfect environment for a stronger move. That is why the $1.13 compression zone is so important right now. XRP is sitting in a structure where momentum could expand quickly, but it may need broader market support to break cleanly. A move through $1.20 with strong volume would be the first signal bulls want to see. After that, traders will look toward higher targets, including the $1.50 roadmap mentioned in the headline. But if XRP loses support around $1.11, the triangle breakout could be delayed, and traders may need to wait for another setup. For SHIB, the situation is more defensive. The token needs renewed demand, not just exchange movement. Binance and Wintermute activity may keep markets functioning, but it does not carry the same emotional power as private whale accumulation. Meme coins thrive on attention, community energy, speculation, and liquidity. When real investor activity slows, price action can become dull or vulnerable. That does not mean SHIB cannot bounce if the broader market turns bullish. Meme coins often move fast when risk appetite returns. But based on the current on-chain picture, SHIB holders should be honest about what the data is saying. The whales are not leading aggressively right now. They are waiting. The market is waiting. And without a strong new catalyst, SHIB may continue to trade in a lower energy environment while Bitcoin and XRP take more attention. So here is the big picture for today's morning crypto report. Bitcoin whales appear to have bought the panic, defended the $60,000 to $61,500 zone, and moved a huge amount of BTC into cold storage. XRP is compressing near $1.13 inside a symmetrical triangle, with $1.20 as the breakout level traders are watching, and $1.50 as the bigger roadmap target if momentum confirms. SHIB whale activity has faded, while exchanges and market makers are now dominating token flows. And the broader market is heading into a critical week with the June 17th FOMC meeting and the June 19th peace agreement signing both acting as possible triggers. This is not a boring market. This is a market preparing for its next direction. The question now is whether whales have already shown us where that direction is headed. And that wraps up today's XRP Pulse Update. The message is clear. Bitcoin is showing strength, XRP is building pressure, and SHIB is waiting for a spark. But traders should stay alert because this week could bring heavy volatility. A clean XRP breakout above $1.20 could shift sentiment fast, especially if Bitcoin keeps moving towards $66,000 and beyond. But if macro news turns negative, support levels will matter more than hype. As always, never trade only on emotion, never chase candles without a plan, and always watch volume, support, resistance, and market context. Crypto moves fast, and the best opportunities often appear when most people are either too scared or too distracted to notice. Thanks for watching XRP Pulse, and stay locked in because the next big crypto move may already be forming right in front of us.